can I remain bullish on the stock market without being bullish on the economy?
I would say if you look out into 2023 for the full year, we think that the economic picture for China will start to will turn incrementally better, especially in the second half of next year, predicated on our assumption that China will start to relax its zero-COVID policies in second quarter of next year, and then in second half, the pent-up demand, the reopening impulse will come through. So for the full year, we are looking at a 4.5% GDP growth in 2023. Definitely a much better setup for relative to what we have had so far. We are looking at 3% growth this year. And then when you put China in a global context, I would still argue that China looks pretty well positioned. Growth is going to accelerate somewhat, and then policy continues to be quite accommodative, and inflation, we think, will stay relatively well contained. So I think China just checks a number of boxes when it comes to the three big macro cycles that investors are very focused on and quite concerned about.
But there's still a lot of mixed signals on the whole COVID zero story, right? You're starting to see the return of COVID zero in some big cities in China as well. I mean, that certainly is where you're seeing the volatility in the market still. And for everyone that's kind of piling their bets and being bullish on China now, how long do you think this market volatility is going to last?
It will last quite a while. I mean, and we have been saying that the reopening sort of journey will be sort of like a two steps forward, one step back sort of process. It will not like a step function, right? So it will take some time for China to really check all the necessary conditions in terms of getting elderly population more vaccinated, getting all the medical infrastructure in place, whether it's hospitals or vaccines or antivirals, right? And also quite importantly, really start to change the mindset of the population about COVID. So I think it would take some time for China to get all the preparation work done over the next few months before they can start reopen in second quarter of next year. But one thing I do want to highlight is that despite having rising cases, and now we are back to sort of historical highs, right? Over the past few years when it comes to reported cases, and cities representing more than 50% of the economy are now designated at medium to high risk areas. But the actual disruption to the economy hasn't really deteriorated that much relative to what we had in April when Shanghai was in a broad lockdown situation. So what that suggests to us is that despite rising cases, the governments are doing the lockdown measures, the isolation measures in a more targeted and specific manner.
Kincher, I want to get your sense then on there's this big debate this month, this reset in the equity markets, and whether, are we back to neutral? Is there a specific level on whatever index that might be, which would indicate if positioning is back to neutral, is what I'm trying to get to here?
Well, I think overall, in terms of investors' positioning, it continues to look very light. So we look at a few different sets of data. First of all, from a global mutual funds standpoint, investors globally are still underweight Chinese equities by about 420 basis points as of end October. And the historical average over the past decade has been 370. So investors are more underweight than usual from a active long-only mandate perspective. And for hedge fund investors, based on our internal statistics, at the peak of the cycle, hedge fund investors allocated about 15% of their risks, net exposure to Chinese equities across A, H, and ADR markets, but now the number is only 7%. But the interesting or encouraging sign that we have been seeing over the past few weeks is that we are definitely there's a significant pickup in hedge fund activities across the board. So I think it seems like the interest is coming back for hedge fund investors, but long-only investors remain relatively cautious.
And what are they buying? And what are you suggesting people buy at the moment?
Well, obviously, if you want to play the reopening story, then I think consumer-related sectors will be the sort of the usual suspects, right? So we actually upgraded a number of consumer-related sectors in our Outlook report that we just put out last week. We upgraded consumer services to overweight from market weight. We upgraded medical services as well. And at the same time, we remained positive on online retailing as well as consumer durables. So it's more like a consumer tilt in our sector allocation framework.
I was going to ask you about just earnings as well. I mean, it hasn't been a pretty picture. But is it more so that the market's more in tune with just the macro side, like the valuation expansion? Is that more important now than so-called earnings?
I think both are important. So we do expect some further valuation re-rating potential to take place, especially if we get the zero COVID policy out of the way sometime in next year. But when it comes to earnings, has been a very significant headwind to the market so far this year. So remember, at the beginning of the year, market was expecting 14% EPS growth for 2022, but now consensus is looking at only 2%. And our number is -2.
Yeah.
But going into next year, we think that there definitely will be some potential for earnings to recover. But I still think that it could be, the consensus is still looking a little bit optimistic. 13% based on consensus earnings expectations, and our number is only 8%.
Kincher, that's the bottom line, and companies can control that with obviously cost. What about the top line? What's your expectation for next year, just generally?
Top line will be around 7 to 8% based on our top-down expectation. So the simple calculus here is that we think, again, on a real basis, we think growth would be at around 4.5. And if you add up like 2% inflation or 3% inflation, that would get you to sort of nominal growth at about 7%. So that's how we think about top-line growth.